Can you believe it? It's already February of 2024. Now, as a real estate agent, I feel like it's my responsibility to make sure that I'm staying up to date on what's happening in the real estate market, but the overall environment as well. So, as I'm looking and kind of seeing what happened at the end of 2023, and now that we've seen the very start of 2024, I feel like there's one thing that I can for sure say, and that is in 2024, nothing is certain. But that being said, here are my 5 bold predictions for what I expect to happen in 2024. Number 1, rates will decrease this year, but not quite as much as people are expecting. There's almost market consensus that rates are going to drop this year. However, what isn't completely agreed upon is how many times we're going to see Fed rate cuts throughout the year. There's been some people who forecast as many as 6 to 8 cuts by the end of the year. So, what I'm tracking against is 1, what is the Fed going to be doing in terms of how aggressively they're still attacking inflation? And 2, what are the market conditions of the economy over the course of the year? The Fed has been pretty honest about the fact that getting inflation down is one of their biggest priorities, and alternatively, the economy has seemed to be somewhat resilient beyond what people have thought. So, what I'm personally thinking is, as opposed to that 6 to 8 cut rate, we're going to be looking somewhere in the 3 to 5 cut range. I think that inflation is going to prove to be a little stickier than people have forecasted it to be, and at the same time, unless there's a drastic and sudden hit to the economy, the Fed's not going to be as aggressively looking to cut as some people are optimistically looking for. So, although I agree it's going to decrease, not quite as much as other people are saying. Number 2, people are going to have a trend of moving away from urban areas. Now, it's no secret that after the pandemic, people put a higher value on having more space and independence in wherever they're living. So from a real estate perspective, that trend has been continuing since 2020. Additionally, what we're starting to see is an overall decrease in some of the conditions in urban areas, and I think people are going to not only have that initial trend, but be looking for a safety and space perspective where they're no longer valuing some of the amenities that city life may have offered, and they're going to be putting a higher value on being able to have that space. So, as people are expecting to make decisions as where you're going to live, you should expect that if you're looking at suburban areas, you're probably going to have a higher competition rate than people looking in the urban areas. So all that being said, when you're making purchasing decisions, it's important to know what your actual go-to-market approach is, because it's going to be drastic different strategies versus a suburban and an urban area, in my opinion. Number 3, compared to 2023, 2024 is going to see a higher amount of sales and inventory on the market. So, it's been an interesting year in 2023 because as interest rates were rising, a lot of sellers kind of decided to take a sit on the sidelines approach because they were looking at higher interest rates. There wasn't a lot of inventory on the market. So from their perspective, they were saying, why would I move somewhere else where I'm going to have a higher mortgage, or if I'm downsizing, have the same mortgage and I'm not even getting as much home? And there was just less to choose from. Now, I think when we're starting to see interest rates decrease a little bit, it's going to start getting them a little more open to that opportunity. Combine that with the fact that sellers will always move for either lifestyle changes or out of necessity, so there's only so long they can elect to stay in their property, and eventually they're going to have to turn over and move over to wherever their final destination is. So, with that being said, as market conditions are starting to open up again, sellers are going to be a little more open to listing, which means there's going to be more on the market and a higher amount of sales to expect this year. And that leads to number 4, home prices are going to rise this year. Personally, I was a little more skeptical about home prices last year, where I was kind of seeing a trend where we had such a heavy rush of buyers for the past 2 years and a rising interest rate environment. I didn't see as much possibility for home prices to continue the trends they were doing. Now, I'll be honest, I was right in some cases and definitely wrong in others, because there were more pocket-dependent areas on how home prices moved as opposed to the nation as a whole. Certain areas showed some resiliency and home prices to continue to go up, like Northern Virginia, and at the same time there were other pockets throughout the nation where you actually saw decreases in home prices. So it really became more area specific as to what you could expect for your home prices. I think generally speaking, when you take into account the fact that there's going to be probably lower interest rates this year, and even though I still think there's going to be more inventory, it's still relatively low. Ultimately, that creates an environment where I think sellers and buyers are going to be having transactions that result in higher home sale prices. Number 5, the overall economy is going to show some signs of stalling this year. One of the biggest factors I'm tracking is consumer debt rates. And as of right now, consumer debt is at an all-time high. I think that, again, as we look back to what the Fed's decisions are going to be, they're really focusing on inflation. And as you start to see companies with a quiet rumbling of them looking at the next year, and you're hearing about either hiring freezes or quiet layoffs to part of their workforce, I think that's them kind of predicting for the rest of this year that inflation may be stickier and consumers aren't in a place where they may be able to make the same type of purchases or volume of purchases as they have in the past. So with all that being said, it's really important to track what's happening from an inflation perspective, what's happening from an overall labor market perspective, and what's happening from a consumer debt perspective, because that's going to show what direction we're going. Now, if the economy continues to be as resilient as it has, consumers probably will continue their spending purchases trends, and the economy might be a little more resilient than I'm expecting. Now, for me personally, when you take into factor that there are political, economic, and social uncertainty going throughout the world, it's going to leave for an opportunity for more volatility, which ultimately could result in some instability in the economy. Now, I'm not sure that's going to happen, but this is just an overall sentiment I've been feeling when I look at the general economy, which is separate from the real estate market somewhat. So those are my 5 bold predictions. Let me know if you agree with all, some, or none of them, and feel free to leave a comment if you have your own bold predictions that you're expecting this year. Thanks so much.